Hi, this is Scott Kegler, Senior Vice President of Business Development with MarshBerry, and I'm here with Tommy McDonald, a director in our financial advisory practice. Tommy, the Business Insurance released their latest Top 100 Insurance Brokers report, and I appreciate you being willing to spend some time talking about some of the key findings. And then, most importantly, what can insurance agencies that want to break into the top 100, what are some of the things that they can be thinking about? But first off, right off the top here, if we look at the top 10, not a lot of change.
Not surprising, Scott. I think the organizations that you're seeing on this list have built sizable businesses with different avenues in which they could grow. And we'll get into some of the historical numbers later in the deck on where the top 10 is trended in terms of revenue size. One of the things that's shocking to me is the growth rates. Because when you think about an organization that's 2.4 billion plus in revenues to be able to produce 14 plus growth, I mean, you're talking about $360 million to $400 million of net revenue growth. So these organizations, albeit very sizable, still finding ways to produce really impressive growth rates.
We look at the threshold to get into the top 10. Over the past 10 years, how has this changed?
Well, I think the whole adage, the bigger getting bigger, just continues to sort of carry weight in how we think about the market consolidating. So when you think about an organization that would reach a top 10 broker status in 2012 being around 712 million, I mean, you certainly need to continue to fuel the engine when it comes to acquisition. So I think many of the firms that are sort of below the top 10 have a long way to go to sort of break in. And I think we're going to see this trend continue, Scott. I mean, the more we get to learn about where the market is headed, I do think, given just the sheer effort it takes, the sheer number of clients you need to write, the sheer number of acquisitions you need to write, it's going to take a long time, I think, for some of these firms to break through.
If you just look at the revenue produced by the top 50 firms versus the bottom 50 firms,
not surprising. It's a top-heavy business, a fragmented business.
To break into the top 50 in 2022, you needed about 100 million of revenue versus 10 years ago, 2012, 52, 53 million would get you into the top 50. So the big are getting bigger.
Absolutely.
Some of the biggest movers in the top 100, some familiar names here. What are some of the commonalities in some of these firms?
Scott, to me, it's just a simple capital partnerships are a common trend if you run through the list of organizations that have been able to produce sizable growth. So firms that have a capital partner that can support an aggressive acquisition strategy, I think, is summary. And each of these firms have a different business model focus, but by and large, they're using private capital to help grow.
In terms of changes in the thresholds over the past 10 years, you want to be the number one broker. 10 years ago, 5 billion got you there. 10 years later, you double that. You got to be 10 billion. But at the bottom end, not that much change, really, right? I mean, to get in the top 100, 2012, 20 million would get you there.
Yeah, Scott, I agree. Not a big change over a 10-year period. But if you actually look at 2021 revenue numbers, so I think it was probably closer to 24, 25 million. So a fairly sizable jump. I think a lot of our clients that sort of sit in that 10 to $15 million revenue range that are really looking to produce sizable growth, this would be a threshold that would be important for them. Yeah. And so I think year over year, just looking at some of our clients that were getting close to getting in the top 100, that the bar just moved a little bit. Scott, it's always good to see new pieces sort of emerging into the group. Just looking at last year's list, we would expect there to be some firms falling off just based off those organizations selling and sort of folding into one of the larger organizations on the list. So we'll continue to see new entrants into the space, and it's good to see some privately held firms reaching the list as well.
With all of the strategic planning sessions that you do and have done with independent agencies, what are some of the things for them to be thinking through?
Yeah, Scott, you and I chatted about this earlier. I really think a lot of what we do with our clients is trying to understand what they're trying to accomplish. Yeah. And, really asking a hard question around what does growth mean to you? and
Hmm.
what relativity in terms of growth is going to help you accomplish your goals. And you don't meet many firms that look at a 15% organic growth rate as sort of a slow burn, but you do meet organizations that have an obsession around growth that changes their thinking relative to getting into the top 100 broker list. And we have a few clients that have been able to do this based off historical capacity. So before you even think about the items you need to put in place in the business to be able to get there, it's what are you really trying to accomplish with the business? And if outsized growth and top 100 broker list is an aspiration, there's a really good list of firms on that top 100 broker list that have used a completely different strategy around capital to grow. And it started in the 2008 2009 time period, really with Hub and USI. And now, if you look at a lot of the groups on the list that have emerged, it's really using private capital and or debt to get really aggressive in growth. And that is usually involves an acquisition strategy that's executable.
Yeah.
But if anybody's listening to this that really wants to look at their firm and say, I'm really ready to take this to a much more sizable level, you have to get creative with your capital structure. And I think you would agree with that, Scott, just based off some of the firms that we work with in that space.
So, what are some examples of different ways to think about it creatively?
Well, I think our industry historically has been under levered. And I say that very hesitantly because I don't want it to come across the wrong way. But if you think about a traditional insurance broker, they're usually proud of the fact that they have no debt.
Yeah. Yeah.
Whereas if you look at a lot of the organizations that have hit the top 100 broker list, they all have debt.
Yeah.
And so leverage can be a very valuable tool. And, when I came into the business 16 years ago, it was hard for a lot of our clients to get access to debt because it's an intangible asset heavy business. And so banks didn't really understand the business all that well. But as the business has performed so well, now lenders look at the space as a really great place to lend to.
Yeah.
And so you've seen these organizations take advantage of that. And so whether or not you as an organization want to sell your equity to a capital partner to grow, I think thinking about how you could leverage debt to help fund a growth strategy is very, very powerful. And the interest rate environment today is a dynamic that needs to be considered. But 5 years ago, it was one of the driving forces around private equity firms really being able to attack an acquisition strategy that was executable.
Yeah. I think the other thing too on some of these points here about production talent and recruiting and goals and big trend towards hiring producers and producer talent from outside the industry and having the capability to bring someone on who has demonstrated a talent to sell a technical product, but now you got to get them up to speed on the insurance industry. And I think a little bit too, helping young, talented salespeople understand the potential wealth creation opportunity that exists in our industry. I mean, it's possible to create a really nice life, for your family, and have a family and raise kids and have a life, and also, build some wealth.
Yeah, Scott, I couldn't agree more. And as much as the industry's changed and the top 100 broker list has changed, the importance of a systematic, consistent focus on production talent hiring is still really important. And a lot of our clients are still struggling to find the right balance. And where do you hire and who do you hire and how do you compensate them and how you hold them accountable and how you push people to move up market. It's still something that will probably never change in our industry. And so any organization that wants to produce sizable growth, and there are a few firms on the top 100 broker list that have been able to reach it without necessarily doing transformational large acquisitions on a consistent basis. But
Yeah.
what they've been able to figure out is the production talent puzzle.
Yeah.
And this industry vertical specialization topic that
Yeah.
everybody continues to sort of embrace is becoming compounded. So those firms that have started 10 years ago continue to get the compounding success from focusing on it. Others are in their infancy, but it's still, again, going to be a continual balance and focus area for a lot of our clients. And just using technology and data analytics to support whatever that industry vertical specialization looks like. It only helps your production talent sell more new business. And
Yeah.
you mentioned it, Scott. I mean, this is a great industry. And MarshBerry frequently says this is the greatest industry in the history of mankind. And it's been rewarding to see our clients that knew it, our MarshBerry colleagues that knew it, and now the investment community knows it. The next step, I think, is really making sure that the next generation knows it. And with what's changed in the industry from a buyer standpoint is many of those organizations have figured out a way to attract and retain talent using some equity vehicle. And so
Yeah.
for an organization that's trying to figure out how do I find talent, how do I keep talent, and how do I grow consistently, I do think embracing equity for non-owners or owners is going to be something that's going to be really, really important for people to figure out. And we see a lot of clients doing that, regardless whether they're going to take on a capital partner or they're going to take on a huge debt facility to drive
Yeah.
consistent growth.
Yeah, it could be a real game changer, right? It's that analogy of you want to own 100% of a grape, or you want to own, 85% of a watermelon, right? Like if you own the whole thing, but maybe you're having trouble getting the best talent, you're growing at 5% a year, but you can figure out a way to share some of that equity to drive the interest of really talented people to come work for you. Maybe instead of growing at 5%, you're now growing at 10, 15, 20%, and creating something really valuable for a wider group of people.
No doubt about
Cool. Well, thanks so much for taking time. I appreciate it. And we'll talk again really soon.
it. Thank you, Scott.
See you.